Hello, everybody. It's Professor Rako, picking it back up with our statement of cash flows. Today, we're going to focus on the indirect method. So, what we've done up to this point in our first four videos, we kind of just introduced the statement of cash flows, the different sections, how we go about doing it. And then we started with the direct method, and now we're going into the indirect method. All right. So, when we did the direct method, we only focused on the operating section because that's the only thing different between the direct and indirect method is the operating section. So now that we're in the indirect method, which is the more commonly used format, we'll go do all three sections and do a complete start to finish. All right. So our procedure for the indirect method, our procedure for doing the statement of cash flows is the same, right? We get the net change in cash. Okay. We do our three sections, and then we kind of put everything together. All right. So when we're going about doing this, the procedure for the indirect method, when I say this is dealing with the operating cash flow section, meaning I'm distinguishing it for the procedure for the direct method when we do the operating section. All right, so notice here, we're going to always start with net income or net loss, but you'll probably not see that in any of your problems in homework or tests. Then we're going to add back depreciation, amortization. I guess I could put depletion expense here, but you typically don't see that, meaning any non-cash expenses that are on our income statement. We're going to back out our gains and losses. We're going to, and then 4 through 7 here, that's just my shortcut. 4 through 7 is my shortcut. I'm going to subtract increases in current assets, add decreases, and then vice versa for the liabilities. Okay, so this is my process for the operating section and the indirect method. All right, so let's get going. So typically I try to keep my videos 10 to 12 minutes long. Statement of cash flows problems are pretty lengthy as far as really talking through every part of it, and I try to show you multiple ways to think about things. So this might be a rather long video, but trust me, these problems are fairly thorough, so hopefully it will help you come test time. All right, so when you're doing an indirect method, you basically have to have a balance sheet, and then it's going to give you some additional facts down here. So let's not worry about the additional facts yet. Let's just go through here. All right, remember, step one is to calculate our change in cash. All right, so if you look at here, our cash went up by $66,000 during the year. All right, so when I get to the next page and I actually do the statement, my answer should be a net change in cash of $66,000. Right, so you're already starting out knowing the answer. All right, kind of give a quick look through current assets and current liabilities. So here's my current assets. Here's my current liabilities. And it tells us down there the short-term note payable is used in operations. Those we're just going to do the shortcut on. So I'm not concerned about what caused them to change. Everything else I just kind of want to take a quick look at. All right, so when you think about property, plant, and equipment, remember that's our investing section. Depreciation actually affects investing and the operating section. But if you look here, property, plant, and equipment went from 300 to 350. Okay, so it went up by $50,000. So at a minimum, we had to have purchased some, but we could have purchased more than 50 and then sold some. So we're going to reconcile that account. Accumulated depreciation goes up for depreciation expense, but remember, if we sell a fixed asset, we take the accumulated depreciation off the books. So we're going to have to reconcile that account. All right, long-term note payable. All right, this is the financing section. We need to figure out what's going on there. Common stock, retained earnings. Those are all financing section because they deal with our equity. All right, and so what we're going to do is try to figure out what's going on with that. Long-term note payable went up. Why did it go up 70,000? We'll need to figure that out. Common stock went up by 15. So did we just issue stock? All right, and then retained earnings. Remember, we can reconcile retained earnings because net income and dividends are what affect that account. All right, so some additional facts. All right, so what I'm going to do on this page, I'm going to do a ton of work. And then when we get to the next page and do the actual statement, I'll be able to breeze through it pretty quick. All right, so that's kind of my plan. So that's what I said. This might take a little bit longer to go through this video, but that's fine. It's worthwhile to get through all this. All right, so additional facts. Old equipment costing $60,000 with a book value of $20 was sold for $30. All right, so typically anytime I see something like this, I try to sell. I try to just write out the journal entry, figure out what's going on. So I'm gonna squeeze a lot of stuff in that space. But once again, if you go back up here and look here, this account went up by 50, but here we're saying we sold some, so we're gonna have to figure all that out. We sold some, which means we also bought more than 50,000 worth to make that account reconcile. All right, a couple quick things here. Remember our formula for book value. Remember, book value equals historical cost less accumulated depreciation. All right, so this is giving us It gives us the book value. Okay, so it's saying 20,000, I'm going to leave the zeros off, equals 60,000 historical cost less accumulated depreciation. So we can solve for that, and accumulated depreciation is 40,000. All right. So why do I need that? Because when I do my journal entry, remember, when I sell a fixed asset, I'm getting cash for whatever the sales price was. In this case, it's 30,000. I also want to take off all the accumulated depreciation of the asset I'm selling, which is 40,000. All right, skip a space here because I haven't determined whether it's a gain or loss yet. I need to take the equipment off the books, the historical cost, because I sold it, so it needs to be 0. All right, so we can see here we've got 70,000 on my debit side, 60 over here, so I need a $10,000 difference here. All right, and that's going to be a gain. All right, so I'm going to have a gain on the sale of 10. All right, so the reason I like writing this out, and I said in earlier videos, the reason we do cash flows left is because we have to understand all these transactions. All right, so this was clearly in chapter 10 or 11 when we did our fixed assets. When we sold fixed assets, that's where this journal entry comes from. All right, so nothing hard about this, but we just need to be able to remember that. That's what makes cash flows sometimes tough for students to remember. All right, so cash, remember, the cash is an investing cash flow. Remember, go back and look at the first video. What goes in the investing section? Sales and purchases of fixed assets go in there. So here's a sale of a fixed asset. So it's going to be a cash inflow in my investing section. But remember, my gains and losses get backed out in the operating section. Okay, so we're going to need to back that 10,000 out when we do the operating section. All right, so that takes care of number 1. Let's look at number 2. All right, it says new equipment was purchased for $10,000. I'm sorry, for $110,000. All right, so let's take a look here at what we got. All right, so if you just want to do, let me just kind of come down here and do my journal entry. All right, it says new equipment. All right, so we have equipment was purchased for $110,000. I'm gonna leave the zeros out because I'm running a little tight on space. All right, notice what it says next. $40,000 was in cash. That means we paid $40,000 in cash, and then the rest was the long-term note payable of $70,000. All right, so why is that important? So if we go back up and look right here, this $70,000 increase is non-cash. So I've got over here that it goes in the financing section, but here I just determined it's non-cash, so we will just leave that off. Now look, it will affect cash flow in future years as we start paying it back, but it's not going to affect cash flows this year. All right, this is this cash right here will go in my investing section because that's a cash outlay for the purchase of a fixed asset. All right, so there's our increase in equipment. So let's go back up here. I talked about you having to reconcile these accounts. All right, so if you think about your PP&E account, you wouldn't have to write this out on a test, but it's always good to understand what we're doing here. We're making sure we've accounted for everything. So the beginning balance is 300, the ending balance is 350. From our first 2 transactions, we can see that we sold 60,000 of one fixed asset, purchased 110. All right, and so that's where our that reconciles that account fully. Okay, so that's what's going on there. So that number 2 takes care of that. Net income for the year was 60,000. Okay, we need that because remember, if you look up at the top here, it says we want to start with net income or net loss. All right, so we have net income of 60. The short-term note payable is used to fund operations. I already put up here that that's going to be in the operating section. That's all that's telling you there. And accounts payable relate to inventory. All right, so not too bad here. There's a few things, though, that may get overlooked. Now, remember, if you go back up here, step 1 is start with net income. We've got net income. Step 2 is to add back depreciation and amortization and depletion. All right, well, we don't have anything that we're amortizing or depleting in this problem, but we do have depreciation, all right? So down here, we've got this accumulated depreciation, 80 and 90,000. Okay, so we need to reconcile that account. So I'm going to come down here to the bottom to do this. All right, so depreciation expense. All right, so remember, when we're doing that, we're really dealing with the accumulated depreciation account. All right, so the ending balance is 90,000. All right, how did we get to 90,000? Well, we started with 80,000. We increased that account for all of our depreciation expense, and then we subtracted it for any sales that we had during the year. Because remember, we backed out accumulated depreciation. So that means we have 90 equals 80. I'm just going to put X here, less the sales. So look, I'm pulling this 40,000 right here. Because remember, we sold that. That was remember, accumulated depreciation is a normal credit balance. So a debit to that account reduces it. And that's what we mean here by that sale. So if we solve through, we can get depreciation expense of 50,000. All right, so I can do that with pretty much any account, reconcile like that, beginning to ending. Another way to do it, like I did with the property, plant, and equipment, is just set up a T account for accumulated depreciation. This actually might be easier for some of you. It might make more sense, especially if you use T accounts a lot in your accounting classes. All right, beginning balance is 80. Notice it's a credit balance. Ending balance is 90. We had that sale of 40. And then we're solving for X, and X works out to be 50,000. Okay, so notice how you get the same answer both ways, but there's my depreciation expense for the year. All right, the only other thing missing, and this is a little bit tricky, but I can go on and tell you, notice we have right here, we've got our retained earnings. We haven't done anything like that. Oh, real quick, the common stock, it didn't say anything about common stock, so you can just assume you issued common stock for cash at 15. So we'll add that in our financing section. All right, but here we have net income. All right, now if you look up here at the retained earnings, clear that change is not 60,000. So we need to reconcile that account as well. So let me go, maybe I'll try to squeeze it in right here. All right, so if you remember, you should have seen this formula before. Ending retained earnings, hopefully I can squeeze this in here, equals beginning retained earnings plus net income minus dividends. All right, so ending retained earnings in this problem is 141. It started at 92. Net income is given at 60, so we can solve for the dividend. Okay, so the dividend ends up equaling, that works out, where's that, $11,000. All right, remember, that goes in my financing section. All right, payments of dividends goes in the financing section. Now notice this problem said nothing about dividends, so that's a little bit tricky. That's something you could easily overlook. But I can go on and kind of assure you that most of the times you're going to have to reconcile this account, meaning they're either going to give you the dividend or they're going to give you the income and leave the other one off. Okay, so make sure you're aware of that. I could have easily put this as a T account as well, doing retained earnings. So like I said, I'm spending quite a bit of time on this, showing you the multiple ways to do it. What do we say? 92. Getting a little tight on space. The ending balance is 141. And then we had the 60,000 income, and then my dividend is that number right there. Remember, dividends reduce retained earnings. That's why it would be retained earnings as a credit balance. Therefore, that's why we have it as a debit. All right, so I've laid everything out. So I typically, when I'm doing these in class with my students, I do all my work right here. But now I've got everything. Now I'm just going to flip over to the next page and start putting things down and preparing my statement of cash flows. All right, so like I said, we're already lengthy in this video, so just bear with me. All right, so starting here, we'd have the heading up there, which we'll leave off. Operating section. All right, so if you go back to what the top of the previous page, start with net income. All right. All right, here we go. Sorry about that. Hit the wrong button. All right, start with net income, 60,000. Add back our non-cash items. In this case, all we had is depreciation. That is step 2. All right, I do this in the same order every time. Remember, we're adding it back because somewhere along the way, we subtracted this 50,000 right here to get to net income of 60. Now that I'm adding it back, it means it's been subtracted once and added once, so its effect is basically 0, but that's what we want because it has 0 effect on cash, and we're now doing the statement of cash flows. All right, back out gains and losses. All right, so a gain was added, so I'm going to subtract it. Okay, so 10,000. Now, once again, I'm subtracting here. Now, look, there was cash involved in that journal entry, but remember that cash is going to be captured down in the investing section. I'll point that out when we get there. Okay, and then remember, steps 4, 5, 6, and 7 was the shortcut. Right, so we had an increase in accounts receivable. So we're going to subtract that. I'm just doing the shortcut now. I don't care what made, I'm not going through and proving why these changed or anything like that. We had an increase in inventory, so that's an increase in a current asset. So we subtract it, and that's 6,000. We had a decrease in prepaid rent. That's another current asset, so we're going to add it because it went down. So prepaid rent, and that was what, 2,000. And then we had a decrease in accounts payable, so that's a decrease in a current liability. So we subtract it. That's a AP, not AR. Sorry about that. 9,000. And then we had a decrease in a note payable of 10,000. All right, so when we get through that, that's our net operating cash flows, and that works out to be $72,000. All right, so now we go into the investing section. So now what I'm doing, I'm grabbing everything on the previous page that had the I put an ICF next to it. All right, so remember we had the proceeds from the sale of equipment. All right, and then we had the purchase of equipment. Those were our only two transactions. All right, so the proceeds from the sale of the equipment was the 30,000. All right, that we got. So if I'm just going to flip back real quick here. All right, what we're dealing with is this journal entry right here. So remember, I'm capturing all 30 of it here, but this 30 of it includes the $20,000 book value and the $10,000 gain. Okay, so once again, if I did not back the gain out up here, it would have been double counted because that 10,000 of that 30,000 deals with the gain. All right, 20,000 of that is book value, 10,000 of it is gain. All right, so I'm backing it out up here, not because it's non-cash. I'm just backing it out because I'm putting it into gains aren't operating activities, right? Meaning it's not going to reoccur next year. I'm not going to sell this same piece of equipment next year. I've already sold it this year, so it's gone. So I'm taking out of operating and putting in investing. All right, the purchase was 40,000. So that's a cash outflow. All right, so we got our net investing cash flows of a negative 10,000. We said that a lot of times that will be negative, and that is fine. All right. All right, now we'll do our financing section. So we had a few items here. We had the issue of common stock, and that was 15,000. So a lot of stuff going on here, okay? And then we had the payment of the dividend that we calculated right at the end on the previous page. All right, and that was 11,000. All right, so that gives me my net financing cash flows. And that's a positive 4,000. All right, so we've done our three sections, all right? So now let's wrap things up, okay? So now what we're going to do, our next line here is to put our net change in cash. And your teacher may call this row something else. That's fine. All right. So what we're doing is we're netting the top three sections, and we get 66,000. Now remember, we already determined at the very beginning of the problem that our answer should be 66,000, and here's that number. Okay, so that should make you feel fairly good about you've done it correctly. All right, you could still get 66,000 and have put things in the wrong sections, but at least you'd have all the correct numbers up there. All right, and then just to finish it up, you would start to do cash at the beginning of the year, which was 15,000. Gives me cash at the end of the year, which was 81,000. And that would be your statement of cash flows. If your teacher makes you do the supplemental disclosures, they would go underneath here. I don't make my students do that. But this would wrap things up. So this is pretty much a complete indirect method problem, right? So notice I spent a lot of time on the first page here going through every piece of information, all right? So that's why cash flow statements are hard for students, because you really got to be able to go through and dissect everything. Okay, so make sure you spend some time going back through this video, making sure you understand everything, so you can hopefully pick it out on your when you're doing it come test time. All right, so like I said, this video is a lot longer. We're pushing 20 minutes here, so I apologize for that, but it's worthwhile to do these problems from start to finish so you can see every step of it. All right, so notice there's no new accounting. We're just doing the statement of cash flows, and we just did the indirect method for the operating section. Okay, so once again, this is a complete statement of cash flows. I'm going to do another indirect problem in the last video, so hopefully these help. They are lengthy, But make sure you do that, because I guarantee you, if you have to work problems out on your test, you will probably have to work one of these out. So make sure you put the time in and can be able to walk through and get through these each section of these without tripping yourself up. All right, hopefully that helps. Sorry it was a little bit long, but hopefully it helps. Hopefully you enjoyed it. Please share with your friends in your class. Hopefully it will help them as well. All right, everybody, take care. I'll see you next time.